to start with this forward look. Things were weaker earlier this year. You do see a real acceleration in demand heading into the fourth quarter. Where is it coming from specifically?
Yeah, well, and thanks for being here in Dallas-Fort Worth. We're coming off a third quarter. We posted a loss this morning, but like you said, we started to see some softness in demand just given the economic uncertainty that really hit probably in February. Led to some softness in the first quarter, through the second quarter, into the first part of the third quarter. But within the third quarter, we started to see some really nice trends. July was soft, August was better than July, and then our year-over-year performance in September actually turned positive. So really happy with the unit revenue we had in September. That's continuing here in October and fourth quarter right now. We're projecting flat unit revenues. What we're really excited about, though, is our profit forecast. We about doubled it today with the guidance we provided this morning.
And there's a lot of focus on the premium cabin as really driving something like 50% of your revenue or that particular gain. I'm just wondering how much that really has been the driver or how much economy has also picked up in tandem with what you're seeing in the business side of things.
It's both. Like we've said, kind of throughout this period where demand was a little bit softer, premium revenue held in there really well. Probably dipped a little bit, but held in quite well. On the lower end, for our lower income earners, that level of demand just really started to fall off. That has come back as well. We're also seeing supply and demand come into balance. So at this point, premium is doing better. The main cabin is doing better as well, and supply and demand's in balance, which allows us to get closer to flat unit revenue.
Have you had to cut prices for economy class to really come back in terms of volumes?
We did, and you saw it throughout this year. Pretty much every airline out there was posting negative unit revenue. So unit revenue's down year over year. That's really because of the fare environment. If you look at real fares, they're down this year versus last year. They're down last year versus the year before that. So we haven't had the type of pricing power we needed. That's starting to come into balance, and it really happens with a couple of things. One, supply and demand has to be in balance. That's happening now in the fourth quarter. We're also seeing that you have to have the right product for your customers, products that customers want to buy. We think we have those types of products with our network and the premium services that we offer.
How much do you expect prices to increase?
They're going to go up, hopefully in line with inflation next year, potentially more, just given how depressed the first half of 2025 was. We haven't seen real airfares grow for a while. A lot of other products have grown. Your Uber tends to go up a fair amount. Your airfares are going down right now. We need to get airfares going up again. I think that happens in 2026.
One thing that American pointed out that I found to be a pretty shocking statistic was that business travel is still below where it was in 2019. Do you see it ever really returning to those levels, or did Zoom fundamentally transform the backdrop?
Yeah, I don't know that it ever gets back to 2019 levels just in terms of total passenger volume. But we are seeing a nice pickup in revenue. And for American right now, there's two things happening. One, business travel is picking up to some extent. And additionally, we're doing a better job getting more share of that traffic. A couple of years ago, we changed our distribution strategy. It didn't work as well as we would have liked. We've reversed that. And we're doing a really nice job right now recapturing a lot of business share. And you saw in the third quarter, our business traffic was up about 14%.
Yeah, one thing that you said in the earnings is that American share of total business travel is 3% below where it was before that change in strategy. What are you doing to bring back that business traveler?
Yeah, well, there's a lot of work happening across our commercial organization. It starts with running a great operation, with having really great customer service, the products that customers really want to have. More tactically, though, we've increased the size of our sales staff. We've been working really close with our corporate partners to make sure that their travel is coming back our way. And it's been really well received. Like, these are companies that want to be flying American Airlines. We just have to have the product in place, and we're doing a nice job with that now.
The product has to do with the plane. I know that that's something that you've been very focused on. You said that there are 50 deliveries of new planes, new jets that you're on track to acquire this year, 59, I believe, next year. I'm just wondering, do you foresee that number going up, that actually you could, because there is this acceleration of production from Boeing, increase some of that that delivery?
Yeah. It's interesting. We look back, and what we've been doing for the past couple of years is putting a bit of a buffer. So if the manufacturer said they were going to deliver on a certain day, we'd put a buffer in that before we actually put it into schedule, just so we weren't out there disrupting customers if that airplane ended up coming late. Given how well they've been doing lately, we don't put a buffer in there anymore. We expect Boeing and Airbus to deliver on time. They're doing a really nice job of that now. And so as we look out to next year, we expect them to deliver on time. I don't think it changes our capital profile or the number of airplanes we have because we pulled that buffer out about 6 months ago.
There is this feeling right now of how do you weigh the investment in new planes and upping some of the quality that people have when you talk about the optionality versus paying down debt versus creating an even bigger buffer should there be more turmoil in the economy. How are you weighing that?
A lot of our fleet decisions are really long-term decisions. We have the youngest fleet in the industry right now. We have a fantastic product across our fleet, but you have to make the right investments for customers. So we'll continue taking new airplanes. We will continue to invest in our fleet. And then after that, we'll use our free cash flow. So after we've made these right investments in the business and taken care of our team members, then we'll use free cash flow on the balance sheet. And that's what we've been doing for the past several years. We made a ton of progress on the balance sheet. We were at $54 billion of total debt in kind of peak levels of COVID. We've brought that down to $36.8 billion at the end of the third quarter. We have a target here in the next year and a half or so of getting that inside of $35 billion, and we're well on our way there.
One thing that people have talked about going forward is just what you see with respect to the government shutdown and some of that uncertainty. A lot of airlines have said that so far they haven't seen it. Is that something that you would agree with?
Yeah, I would agree with that. Two areas. One on revenue. There's not much of a revenue impact. There's something there, but it's definitely less than $1 million a day. The next thing you look at is the operation. Is anything happening with the operation? And so far, while there may have been a couple flare-ups here and there, for the most part, we have been running a fantastic operation in the month of October. And, really credit to all of the government employees who support the aviation infrastructure. They're coming to work every day, keeping everything secure and safe. We appreciate that. We expect Congress will get back to it and reopen government here.
Just the reason why we love talking to the airlines, and in particular you, is because you have the best barometer, real-time barometer of the consumer in America at a time where there's a government shutdown and we are not getting any of the real-time data.
Right.
What other airlines have said is that there has been a reacceleration in the economy from what they can see with respect to consumer demand. Would you agree with that? Is it pretty much across the board a reacceleration, or is there something funky about what you're seeing in terms of the type of demand, the types of consumers that are traveling?
Well, we're seeing really nice demand right now. And for sure, if you look back kind of first half of the year, right up until that first week of July, demand looked pretty soft. But then there was this reacceleration as there was a little bit more certainty in the economy. And to the point earlier, there was a bit of a bifurcation in demand. Higher-end, higher-income consumers continued to spend. Lower-income consumers backed off of travel a little bit. What we're seeing right now is really nice trends from the higher-end consumer, a lot of premium traffic coming in. And then at the lower end, that traffic's coming back really nicely as well.
So you also see a reacceleration?
Absolutely, yeah.